Hi there, welcome to Kneppy Invest. Continuing on my video series looking at companies' financial year 22 results, in today's video, I'll be focusing on a company called XTEK. I will probably say that the majority of investors on the ASX have never heard of this company because it is small cap, market cap less than $50 million. However, in saying that, this company is profitable and operating cash flow positive only for financial year 22. And you could also argue this company is awfully cheap right now, just based off their financial results for 2022. So what exactly does XTEK do? Now, this is an international defense industry company. They have two divisions, ballistics and technology. Their ballistics division has been really successful in calendar year 2022, and that is HighCom. And their ballistics division is focused on designing, manufacturing, and supplying global military, law enforcement, and first responder customers with personal protection, ballistic products and solutions, including body armor, ballistic helmets, and composite structures. Now, their technology division, even though it hasn't been as successful as their ballistics division, is still going fairly good. Now, their technology division is focused on manufacturing and supplying global defense and security agencies with world-leading Australian-made and globally sourced systems, which is UAVs and UGV solutions, sensors, detection and optical payloads, software, 3D mapping and modeling, and tactical situation awareness, and support, which is system integration, training, and service support. Now, before we get into the results for XTEK, these are the next 5 companies I'll be featuring in this video series, including Data3, NextDC, PWR Advanced Cooling Technologies, IPD Group, and BlueScope. If you have any suggestions, and I do prefer companies that are profitable, also probably prefer companies that are growing their revenues through time. So leave any suggestions in the comment section of this video. Now on to XTEK. Before we have a look at XTEK's financial results, the most important step for me personally when I'm researching a company, and to be fair with you, I know a lot about XTEK because for full disclosure purposes, I have been a long-term shareholder of this company. When I say long-term, I'm talking about over 5 years. Now, typically, the first step in researching a company is determining the quality of that company. Is it a high-quality company or a low-quality company? Because this step becomes very important in how I deal with that company in the future. So for high-quality companies, it's all about the value right now, while low-quality companies, it's all about the sentiment and the trend in the share price. Now, to be honest with you, even though I have been a long-term holder of XTEK, I'd probably say that the quality of this company is low right now, even though they are profitable and even though they are operating cash flow positive. Because if this company was a high quality company, in my opinion, I would be going all in. I'd be putting all my money into this company right now just based off valuation reasons. So we'll talk about the valuation of XTEK during this video. So the most important thing for me right now about XTEK is the sentiment and the underlying trend in the share price. And we'll also have a look at that during this video. In fact, we'll look at the daily chart towards the end of this video. And that's the main reason I'm holding on to XTEK shares right now. Now, in saying that, there is potential that XTEK could transition from a low quality company to a high quality company over the next 5 years. And if it does do that, we are going to see the share price and the valuation adjust. So this company could actually increase the valuation through 2 things: financial expansion and multiple expansion. And as a shareholder of this company, I hope they do that. And if they do that, the potential is the share price could significantly rise from here. And when I say significantly, I am talking about a multi-bagger from current share prices. Now, when you do look at the long-term chart for XTEK, and this is the 10-year chart for this company, this does give a good representation, a good clue that this company is not high quality. For the majority of high quality companies, you're going to see the share price increase over time, particularly over a 10-year period. So you're going to see the chart, the share price chart, go from the bottom left to the top right. For XTEK, really over the last 10 years, the share price has gone sideways. There's been times the share price has gone on the run, particularly in 2019. In fact, the share price rose from about 45 cents to 95 cents in a fairly short period of time. And when I'm saying short period of time, I'm talking about a we'll say about a 10 to 15 week period. But there's also been periods when there's a lot of negative sentiment in this company. And that was particularly true in 2021 when the share price fell from about the 60-cent range all the way to a low of about 15 to 16 cents. But now, and we'll have a look at the daily chart later in the video, sentiment has shifted. And the main reason sentiment has shifted in recent months, and when I say recent months, I'm talking about since about March, so that's 6 months ago. The reason sentiment has shifted in the last 6 months is because of the financial performance, is because of the myriad of contracts this company has won over the past 6 months. So this company has actually benefited from what's happening in Ukraine, and because all these orders for ballistic armors have gone through, and this company is definitely benefiting from these tailwinds right now. And the question the market is wanting to know, and in fact, the question I want to know right now is whether these tailwinds can continue for the next few years. And there is suggestions that management of this company is thinking that these tailwinds can continue. And I'll talk about why I think the management is thinking they can continue later on in the video. Now onto the financial results for XTEK. And the first thing I always do when I do look at the financial results is have an understanding of the valuation, which is the markup of the company. And for XTEK, at a share price of 46 cents, the markup of this company is 46 million. And the reason why it's 46 million is because there is 100 million shares on issue for this company. So it's very easy to know the markup of this company simply by just looking at the share price. You just have to time it by $100 million. Now onto the financial year results. And it's very important to have a look at these numbers, particularly operating cash flow, and not just stop there, because the operating cash flow could be a little bit deceiving. So XTEK had revenue of 58.2 million, profit 5.7 million, and operating cash flow 25.5 million. So if you just looked at the operating cash flow in isolation, you'll think this company is currently trading at 2 times operating cash flow, and that is absolutely ridiculous. So you do have to dig a little bit deeper to know that operating cash flow of 25.5 million is a little bit deceiving, and the company did mention that as well in their presentation, probably also in their financial results, well, financial statements as well. And the earnings per share for this company is 5.7 cents. And again, you just divide the profit of 5.7 million by $100 million, and that's how you get that earnings per share. Now onto the revenue growth. And the first thing I want to see for all companies is, does the company or is the company showing any signs of growth, particularly in terms of revenue? I want to see a company growing their revenue growth through time. It's probably one of the most important things I look for in all companies when I'm doing research. And of course, for XTEK, they have grown their revenue from 2012, $4.4 million in that year, up to $58.2 million in this year. We saw in 2021, revenue did pull back a fair bit from 42.7 million to 28.3 million. And that's why the market had a little bit of a hissy fit. And that's why the share price dropped from 60 cents to 15 cents. So 75% drop in the share price just because the market was concerned because revenue did drop. The other thing I've included in this chart is the shares outstanding or the shares on issue, how they've increased over the past 10 years from 13 million to 91.5 million. In fact, that's now up to 100 million. In fact, shares on issue have more than doubled over the past few years. So even though revenue is increasing, if you look at the compound annual growth rate in revenue per share, it's actually gone down. So it's minus 12%. But over the past 10 years, revenue per share has increased at 10% per year. Over the past 5 years at 10.4% per year. Now, it's really important for this company to stop issuing more shares unless they do a significant acquisition or something like that. And hopefully, because this company is now profitable, operating cash flow, they won't have to raise more capital in the future. So the outstanding shares, or the shares outstanding, won't be going up like we've seen over the past 10 years. In this particular slide, we're looking at gross margins and gross profits. And something really important has happened for XTEK over the past year, and that is a significant increase in their gross margins. So if we go back and look at the last about 4 or 5 years, gross margins have been below 30%. And in fact, in 2019 and 2020, gross margins were around 20%. But in 2022, gross margins were 47.2%. And that's why we've seen, or this company has seen, a significant increase in their gross profit from the last few years. In fact, it's increased from a high of 8.6 million in 2020 to 27.44 million in 2022. Another question I have for this company moving forward is, can they maintain these gross margins? And if they can, this company is definitely looking cheap at current valuations. Now on to XTEK's financial statements. And the first thing we're going to look at here is the cash flow statement. And of course, if you just looked at the cash flow statement in isolation, without looking at anything else, you'd be highly excited about this company, and you'd probably be putting all your money into this company simply because of the operating cash flow of 26.1 million, which compares very favorably to 2021. In fact, XTEK only had operating cash flow in that year of 243,000. So a significant increase in operating cash flow, but that does not tell your whole story. You have to dig a little bit deeper, and we will dig a little bit deeper in the next slide. But at the end of the financial year, they had $36.2 million of cash. So that's also intriguing because the market cap of this company is less than 50 million, yet they have $36.2 million of cash on hand. Again, that cash on hand is a little bit deceiving. So let's explore why the operating cash flow and the cash on hand at the end of financial year is a little bit deceiving. We gain an understanding why that operating cash flow and that net cash in bank is a little bit deceiving by looking at the reconciliation of cash flows from operations found in note 4 of their financial statement. And the reason I really like the reconciliation of cash flow from operations is because we get an understanding why there might be discrepancy between the profit and the operating cash flow. And for XTEK, there is a significant discrepancy between the two. For instance, the profit for financial year 22 was 5.7 million, while the operating cash flow was 26 million. So why was a discrepancy? So let's go through the reconciliation. The first thing I always look at is depreciation amortization. A lot of times this is the reason why there might be a discrepancy, and a fairly big discrepancy. For XTEK, depreciation amortization is fairly low, only $1.7 million in financial year 22. So the next thing is you look at changes in working capital, which is found in the lower half of the reconciliation. So changes in working capital include increases or decreases in trade debtors, inventory, and trade payables. So the first thing we want to look at is trade debtors and inventory, and there was a significant increase by about $14 million in financial year 22. But an increase in trade debtors and inventory is in fact a cash outflow. We want to look for cash or significant cash inflows. So that increase in trade debtors and inventory is not the reason why there is a discrepancy between profit and operating cash flow. But the reason there is an increase in trade and other payables by $34 million. So that $34 million is a cash inflow. And that is a reason there is a significant difference between profit and operating cash flow. That is the reason why you got to take that operating cash flow of 26 million with a grain of salt, and also why that cash on hand in the bank is a little bit deceiving. The company also explained this in the presentation. They mentioned the cash at bank, 36.2 million, includes 22 million US dollars of unearned income from prepayment of contracted orders. So they got these orders or received these orders and told the customer, we want this money up front. And they hadn't earned that money at that point in time because they hadn't produced or manufactured the equipment that the customer wanted. And that's why there was a high operating cash flow for this financial year. That's why there was a significant amount of cash in the bank at the end of the financial year because they had to manufacture this equipment for the customer, and that's why those two numbers are quite deceiving. Now let's have a look at the valuation of this company. And when you look at some of these valuation metric numbers, and if you thought this company was high quality, you'd be getting very excited right now because XTEK has a P ratio of 8.1, price to sales ratio of 0.8, and a price to operating cash flow adjusted, because I want to take away that unearned income, still 7.1. If I saw a high quality company with a P ratio of 8.1 and a price to operating cash flow of 7.1, I would be extremely excited. And that's one of the reasons I wouldn't consider XTEK to be high quality. The market doesn't consider XTEK to be high quality. And another reason why we know the market doesn't consider XTEK to be high quality, if you do a reverse DCF based off the earnings per share in financial year 22, if you don't know what a reverse DCF, it's the growth of the company to justify the current valuation. So the market is saying they think this company will actually not grow at all in the next 5 to 10 years. In fact, they think this company will go backwards to the tune of 3.3% per year. So that is the rate of growth of this company to justify the current valuation. So right now, the market does not believe in this company. The market does not think this company can continue the momentum it has seen during calendar year 2022. And that's understandable because this company's success has only been limited for a very short period of time. And the market wants to see that this company can maintain this momentum over the next few years. And if the company proves it can maintain this momentum, right now, this would be an absolutely amazing to take a time to take a position in this company. But significant risks are in the future, and there are significant risks whether this company can maintain that momentum. And that's why right now the market is giving a little bit of a discount to XTEK. And when you look at the financial year 23 outlook, the company did give in their presentation, they are really bullish that this momentum can continue at least into financial year 23. They called financial year 22 as transformational, and that's probably the right word for what this company has experienced in the second half of financial year 22. But if you look at some of their guidance, well, not really guidance, but some of their contracts they have in hand right now and the pipeline, there is potential that financial year 23 is going to be better than financial year 22. For instance, they have contracted orders totaling $45 million right now. That's about 77% of financial year 22 revenue. They also have a pipeline of armor and technologies worth more than $130 million. And their group's technology division had multiple value-added reseller SUAS, which is small unmanned aerial systems, related opportunities being prosecuted and negotiated across the Australian New Zealand region, valued in excess of $30 million. And their high-com armor business continues to engage with EU customers for multiple large order follow opportunities, as well as customers in Middle East and US, and has a pipeline of leads exceeding $100 million. So there's definitely the possibility that this company might experience financial year numbers exceeding those they saw in financial year 22. So perhaps the market is wrong that this company can't continue the momentum in the next few years. In my opinion, capital allocation is one of the most important decisions that the management of a company have to make, particularly those companies that are free cash flow positive. So what does a company do with the cash that the business is generating in the day-to-day business? And I think it's particularly important for those companies who are transitioning from being free cash flow negative to free cash flow positive, just like XTEK is going through right now. And on the 15th of September, the company announced a new capital management policy. So I'll go through this fairly quickly. In the overview, they mention that their capital management policy outlines clear guidelines for the prioritization and allocation of capital to the balance sheet to shareholders via dividends and/or share buybacks. and to the continued investment in the XTEK business, which includes both organic and acquisition opportunities to generate earnings growth. So, the capital allocation decisions a company has to make include dividends, share buybacks, acquisitions, and research and development, and actually mention that in the overview. So it's really important that this company is going through these sort of thinking processes. One of the most important things a company management have to do. Now, in terms of growth, they mention here, all growth and investment decisions will compete for capital, and as a result, the most value accretive or strategic growth projects will be prioritized for funding. In regards to the balance sheet, XTEK will prioritize free cash flows to achieve a target net leverage. Now, if we go to dividends, and this is one of the most exciting things, particularly for those shareholders who have been in this company for a long time, at this stage, the company anticipates declaring a dividend in financial year 23. Now, the only reason they would anticipate declaring a dividend in financial year 23 is if they think financial year 23 is going to be great for the company, and this company is going to generate a lot of free cash flow so they can give that or some of that money back to the shareholders. And share buybacks, another very important possible capital allocation decision, particularly if the company is undervalued. That's when share buybacks become very important. So if the share price doesn't increase much from here and the company expands or financially expands from here into financial year 23, share buybacks could be the way to go. And they actually mentioned here, share buybacks will be considered as an alternative to dividends, having regard to franking credits, or as a standalone option in certain circumstances when the company has excess capital and having regard to the prevailing share price. And that's the most important point there. It's a prevailing share price. You want to do share, or you want to see companies' management do share buybacks when the company is undervalued, not when the company is overvalued. So very important, the management they're going through these decisions because these are the most important decisions that a company management have to do for a company that has just turned into becoming free cash flow positive, and particularly if they expect to remain free cash flow positive in the future. Now to the daily chart, and this is becomes very important looking at the trend in this underlying sentiment in the company, simply because I don't consider XTEK to be high quality. It's low quality. Doesn't mean it will always stay a low quality company. So positive sentiment is really important. And the sentiment in this company definitely shifted back towards the end of February and the beginning of March. And what happened in February? Ukraine. And that's how this company started getting more and more orders in regards to their armor. And before February and March, not a lot of volume. And because there was not a lot of interest in this company, the share price was drifting down and down and down and reached a low of around about 16.5 cents towards the end of February. But because of these increase in orders the company was getting in regards to their ballistic armor, that was a shift in sentiment. That was a catalyst for that shift in sentiment. That was a catalyst for a new uptrend in the share price, and the share price just keeps on climbing. And right now, the share price is hovering around about 46 cents. The other thing you'll notice when you look at the volume, substantially increase in volume over the past 6 months. So the market is becoming aware of XTEK, and the market will become more and more aware of this company if they can maintain being profitable, free cash flow positive. If they issue a dividend, that would really put the XTEK in the spotlight of the market, particularly those investors and fund managers who love dividends. That's all I have for this video looking at XTEK, their financial year 22 results. Exciting financial year for XTEK and their shareholders, particularly those who have been with this company for over 5 years. That's me. So nice. That's all I have for this video looking at XTEK and their financial year 22 results. An exciting financial year for the company and its shareholders. Some of those shareholders are long-suffering shareholders because the share price has just gone sideways over the past 5 to 10 years. If you have any questions, any thoughts, any opinions, I'd love to hear them. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified, and can speak to your own financial needs. That's it for this video. Have a great day. Bye.